The decision by OPEC spilled over into soybeans. And Michelle Rook is back with more in this morning's Markets Now.
Monday's market closes, we were higher in soybeans, kind of mixed in both corn and wheat futures. Randy Martinson with Martinson Ag is in with analysis. And Randy, we continued our rally in soybeans after getting above the $15 mark in old crop last week. And so, are we still trying to digest the positiveness of the reports, or was it the influence from the outside markets or crude oil or soybean oil or what?
I think it was a combination of those. I mean, I still think we have some of the report hangover taking place. We did have some bullish numbers, both old crop and new crop for soybeans, and it shows that USDA is going to have to make some adjustments on the demand side for old crop. On the new crop side, acres we need to buy some acres for soybeans because our stocks are going to likely be too little at this point. But I do think the fact that crude oil gapped $4 higher in the overnight because of that surprise and cut from OPEC pushed the soybean oil, which also spilled over to help push the soybeans higher.
We got some follow-through buying initially Monday on the corn market, but then old crop ended lower. So was there just some unwinding of spreads, or did we see a little pickup in farmers selling?
I think we saw some pickup in farmer selling. I mean, and we're also worried once they start rolling out of the May and rolling into July, you're going to roll to a 20-cent lower price. So I think we did see some hedge selling pressure. I think the losses in wheat the second half of the session spilled over to pull corn down as well.
Plus, you probably ran up into a little chart resistance there too, didn't you, in May?
Oh yeah, you did. I mean, you start looking at where those levels are at in some of those old crop, and I think that was part of the what we ran into with wheat too, is just a little bit of chart, selling. Once we saw Minneapolis break above 9, I think that hurt that market.
Yeah, I was going to ask you why wheat actually faded some of the early gains.
I think the big part was some profit taking, and part of it is that we could be looking at some moisture down in the southern plains, but Kansas City held on. But I think we also saw some spread unwinding. Chicago has been carrying such a deep discount to the other two exchanges, and I think some of that was some unwinding today as well.
Yeah, that spread has gotten historically wide, so they probably needed to rewind that a little bit. Good point. Thanks so much for joining us, Randy Martinson with Martinson Ag. Our full analysis at agweb.com, but we'll have more Ag Day coming up.